Have you ever wondered how investing works? It's a question that has intrigued many. At its core, investing is about growing your money. It's about taking what you have, no matter how big or small, and making it work for you. Imagine sowing a seed. With the right conditions and care, that seed can grow into a thriving plant. Investing works in a similar way. You put your money into financial schemes, shares, property, or a commercial venture, much like planting a seed. And with time, patience, and the right conditions, your money can grow, providing you with more than what you started with. That's the basic premise of investing. It's about making your money work for you, so you don't always have to work for your money. It's about planting seeds today for a greener financial future. So if you've ever thought about growing your wealth, stick around as we delve into the world of investing. Before we dive into investing, it's crucial to understand the basics of finance. Imagine you've got a pile of money. Now, whether that pile is large or small, how you manage it is what we call finance. It's all about the management of money and the process of acquiring needed funds. It's the art of balancing between what comes in and what goes out, and making sure that the pile doesn't dwindle away to nothing. There are two main types of finance that you should be aware of: personal and corporate. Personal finance is all about managing your individual or family finances. It includes budgeting, saving, investing, understanding taxes, and making sure you're prepared for the future. It's like being the CFO of your own life, where every decision can have a significant impact on your financial health. On the other hand, corporate finance is the realm of businesses and corporations. It's about how these entities manage their money, how they fund their operations, and how they decide to invest in growth opportunities. This could involve decisions about acquiring another company, buying new equipment, or investing in research and development. Now, you might wonder, why do I need to know all this? Well, understanding finance, both personal and corporate, is crucial because it helps you make informed decisions about saving and investing. It's the foundation that allows you to plan for the future, whether that's buying a house, planning for retirement, or even starting your own business. Finance isn't just about numbers and spreadsheets. It's about understanding the value of money, the cost of opportunities, and the impact of your decisions. It's about making the most of what you have and planning for what you want. Now that we have a clear understanding of finance, let's dive into the world of investing. Because remember, your money should work for you, not the other way around. It's time to learn how to make your pile of money grow. Investing, as it turns out, isn't as complex as it may seem. Think of it as planting seeds today, so you can reap the fruits tomorrow. It's about committing your resources now, with the expectation of generating additional income or profit in the future. Now let's break this down a bit. Imagine you have $100. Instead of spending it right away, you decide to invest it. You're essentially saying, I believe this $100 can grow into more than $100. And that's the heart of investing. There are various avenues where you can invest your money. One popular option is stocks. When you buy a stock, you're buying a piece of a company. You're essentially betting that the company will be successful and the value of your piece will grow over time. Then we have bonds. When you buy a bond, you're essentially lending your money to a company or a government. In return, they promise to pay you back with interest after a certain period. Bonds are generally considered safer than stocks, but they also tend to offer lower returns. Mutual funds are another option. These are investment vehicles that pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. This allows individuals to invest in a diversified portfolio without having to buy each security individually. And finally, there's real estate. Buying property can be a lucrative investment, especially if property values increase over time. Plus, if you rent out the property, you can earn regular income from it. So you see, investing is not about getting rich quick. It's about patience, discipline, and making informed decisions. It's about understanding the risks, diversifying your investments, and staying committed for the long term. Investing can be a great way to grow your wealth over time. But how does one get started? Starting your investment journey might seem daunting, but it doesn't have to be. In fact, with a clear roadmap and a bit of patience, it can be a rewarding adventure. So, let's delve into how you can embark on this journey. Firstly, it's imperative to set clear financial goals. Ask yourself, what do I want to achieve with my investment? It could be saving for retirement, funding your child's education, buying a home, or even just growing your wealth. Having a clear goal not only gives you direction, but also helps you decide how much risk you're willing to take. Speaking of risk, understanding your risk tolerance is the next crucial step. Are you a daredevil willing to ride the highs and lows for potentially higher returns? Or are you more of a tortoise preferring a slow and steady approach? Remember, higher potential returns often come with higher risk. So, gauge your comfort level with this trade-off. Once you have your goals and risk tolerance figured out, it's time to choose the right type of investment. From stocks and bonds to real estate and mutual funds, the world of investing is diverse. Each type has its own set of dynamics, benefits, and risks. So, do your homework and pick the one that aligns with your goals and risk tolerance. Now, you might be thinking, this seems like a lot to handle on my own. And you'd be right. That's where financial advisors come in. They can provide guidance, help you devise a strategy, and even manage your investments for you. So if you're feeling overwhelmed, don't hesitate to seek professional advice. Remember, investing isn't a get-rich-quick scheme. It's a long-term commitment that requires patience, diligence, and continuous learning. So don't rush and don't panic when things don't go as planned. Instead, stay focused, stay informed, and stay disciplined. Getting started with investing is the first step towards financial independence. But remember, it's important to keep learning and stay informed. So, what are the key points to remember about finance and investing? Firstly, it's crucial to grasp the basics of finance. Remember, finance is all about the management of money and the allocation of resources. It's understanding how money works, how it's made, managed, and invested. It's about budgeting, banking, insurance, mortgages, investments, retirement planning, tax planning, and estate planning. It's the lifeblood of our personal and corporate lives, and it's a fundamental skill for survival in today's world. Secondly, investing is the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit. It's not a get-rich-quick scheme, but a process that takes time. It's about putting your money to work for you, creating additional streams of income beyond your regular paycheck, and building wealth over time. Next, let's talk about getting started with investing. It's not about timing the market, but about time in the market. Start by setting clear financial goals. Do you want to save for retirement, a down payment on a house, your child's education, or maybe a dream vacation? Then, understand your risk tolerance and invest accordingly. Diversify your portfolio. Don't put all your eggs in one basket. Consider low-cost index funds or exchange-traded funds for beginners. And remember, it's never too early or too late to start investing. Lastly, staying informed is key. The world of finance and investing is dynamic and ever-changing. Regularly educate yourself, follow credible news sources, read books, attend webinars, or listen to podcasts. Understanding the market trends and economic indicators can help you make informed decisions and manage your investments effectively. Remember, the journey to financial independence begins with a single step. So why not take that step today?